Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bawulski.
No major Eurozone data is due in the first half of the day, so traders will focus on the Eurogroup meeting and comments from ECB President Christine Lagarde. At the same time, headlines from the US and Iran will continue to drive market sentiment. If EURUSD extends its decline, the first area to watch for buyer activity is support at 1.1675. Only consider longs after a false breakout there, targeting a move back to 1701, the level formed at yesterday's close. A breakout and retest of this range would confirm further upside, with a potential push toward 1.1723. The final upside target sits at 1749, where you plan to take profits. If EURUSD continues to fall and shows no reactions around 1675, pressure on the pair will increase. In that case, sellers may push the price toward 1657. Only a false breakout there would offer a valid long entry. Alternatively, I look for bounce traders from 1.1627, targeting an intraday correction of 30-35 pips. Sellers remain in control, supported by a worsening sentiment around the Middle East situation. If EURUSD attempts a modest recovery in the first half of the day, the first bearish reaction is expected near resistance at 1.1701. A false breakout there will provide a short entry, targeting a move down to 1675. A breakout and consolidation below this level, followed by a retest from below, will open the door for a deeper sell-off towards 1657. The final downside target sits at 1.1627, where you plan to take profits. If EURUSD moves higher and bears fail to show activity around 1701, where the moving averages are also supporting sellers, it is better to postpone short positions until the next resistance at 1.1723. Shorts there will only be considered after a failed breakout. Alternatively, I look to sell on the bounce from 1749, targeting a 30-35 pip intraday pullback.
And now it's time for GBPUSD. Let's discuss it with Paulo Greco.
The average volatility of the GBPUSD pair over the last 5 trading days is 99 pips, which is considered as moderate for this pair. On Tuesday, May 5, we expect movement within the range limited by 1.3434 and 36.32. The upper channel of linear regression is directed downward, indicating a bearish trend. The CCI indicator has entered the overbought area and formed a bearish divergence, warning of a downward correction that has already completed. The GBPUSD currency pair continues its recovery after 2 months of geopolitics. Trump's policy will continue to pressure the US economy, so we do not expect the US currency to grow in 2026. Therefore, long positions targeting 39.16 and above remain relevant. When the price is above the moving average line, it's a sign line on the graphic. If the price is below the moving average line, shorts can be considered with targets at 1.3489 and 34.34 based on purely technical grounds. In recent weeks, the British currency has recovered, and the geopolitical factor is losing its influence on the market.
That's all for today. See you online soon.